Welcome. My name is Christine Moorman. I am a professor here at the Fuqua School of Business at Duke University, and today I'm going to talk to you about a project I've been working on since 2008, and it's called the CMO Survey, and I will be talking about some specific topics, as you can see listed on the cover of the slide. But let me just kind of set you up and tell you a little bit about the survey more generally. The survey, as I mentioned, I started in 2008, and twice a year I've been collecting information from marketing leaders and then disseminating that information in a variety of forms. We publish 3 reports every year, and our goal here is to really have a forward-looking document, so you'll see some of the measures that we collect are based on projections of where marketers think things are moving. We also try to track marketing excellence. But the big picture goal here is to improve the value of marketing in organizations and in society. And thank you to my sponsors who I've listed here in Deloitte and the Fuqua School of Business and the American Marketing Association for making this possible. So just to tell you a little bit about the survey that I'm going to be presenting from today. This is a sample of 316 marketing leaders at for-profit US companies. And you can see some of the demographics in terms of the economic sector and the industry sector. We also have a range of company sizes as measured by the number of employees and the sales revenue, as well as sales from the internet or online sales. So, as I mentioned, we cover a number of different topics in the survey. This is the full range that were published in one of the reports that you can find online, and I'll share the link to that at the very end of the talk. And what I'm going to do today is present to you a few warm-up topics in the form of marketing spending and some of the forecasts, but then we'll get into a deeper discussion, as promised, on managing AI in marketing, as well as diversity, equity, and inclusion. And throughout the conversation and the slides that I'll share with you, I would love to take your comments and your questions. If you need any deeper discussion of a particular topic, also share your ideas. In some cases, I have my own ideas about what's going on, and we've done some additional analysis to show you some of what we think are some of the keys to getting to better outcomes. But would love to tap into the collective experience of all of you that are attending here today, including a lot of our alumni. So one of the warm-up topics is this issue of macroeconomic forecasts, which of course has been in the headlines here for at least last year, but maybe the last few, and COVID, of course, complicated things as well. What we see here is that marketers actually are more optimistic than they were in the spring, and certainly than they were in the fall. This varies somewhat by sector, and you can see on the right-hand side there of your screen, you'll see some of the sector breakouts, as well as the most optimistic and least optimistic industries. This is on a 0 to 100 point scale. So, over time, things stay in this sort of bounded area that you see in the middle there, but there is definitely a rise over the last year. And in terms of just a rating of more or less optimistic, missing some data here. Let me move on from that and move on to because it's kind of a repeat of the previous slide in terms of an increase in optimism. So thinking about how this issue of the economy affects and the potential threat of these inflationary pressures affect marketing spending, what you see here is that marketers still on average are concerned about marketing spending levels being affected by inflation. So if you look at the gray bars, those are from the fall in the survey that we've just collected. This percentage of 45% is down from the spring where it was 52%. But still, on average, it's the highest category. Marketers are seeing some effect on spending levels, and you'll see that later. So where is this optimism coming from? Why do they still say that they're optimistic despite the fact that these inflationary pressures appear to be affecting spending levels? One reason is that we see an increase in profit levels. So you see this rising up. These are over time. Being able to chart this over time is very useful. And we can see, big drop-offs during these COVID years and then big lift-offs after that. And in general, sales revenues are maybe flat, obviously decreasing a little bit, but profits are up. And even more impressive in terms of performance effect, which I think is responsible for this lift in optimism, are some of these effects on customer retention, customer acquisition, and in particular, the value of brands. So we see all of these lifting over time in response to how well companies are doing, and we think that that's having a positive effect. So let's look now at maybe some of the spending effects in particular, because this is something, if you're a marketing leader, folks are always trying to benchmark how well they're doing on marketing spending. And so let's look at what those spending levels look like over time. And what we've done is we've charted here what's happening with marketing expenses as a percent of overall budgets, which is the green line, and the gray line is the marketing expenses as a percent of overall company sales. And so if you think about the overall budget number, this is probably a reflection of how marketing is viewed within the company, the budget that it's getting relative to other initiatives within the company, and then as a function of sales, this is going to move around depending on what's happening with sales levels. So in general, though, what we see in both of these cases is we see this downward trend that marketing budgets are lower in this fall 23 period, and based on these inflationary pressures that we reported earlier, that's very, very likely the reason associated with that drop. And if you're interested in a larger breakout, which I know a lot of marketers are in trying to understand, sort of where their budget is relative to others, you can see here that, on online sales, that the online companies, the companies that have a higher proportion of their sales from online activities, do actually have higher marketing budgets, as do smaller companies. So companies with fewer employees and a lower level of revenues definitely have higher percentage of marketing budgets. And then in terms of the economic sector, this is pretty consistent over time that the B2C sector's marketing tends to be funded at a higher level within those companies. Despite the fact that we see this drop off, though, which you can see in terms of the predictions. So here we're asking, by what percent has your overall marketing spending, or in the case of digital marketing spending, changed in the prior 12 months? So we're asking for that percentage change, and that's under the fall 2023 level. Then we're saying, to what extent do you expect this number to change in the next 12 months? So there's a forward-looking indicator. So what we see is that between spring 23 and fall 23, that percent change, it really hasn't changed very much. Those would not be likely statistically different from one another, but we do see a much more optimistic projection looking over the next year, which, rising from 7.9 to 9.9 on the digital front, and from 2.6 up to 7.2 on the overall marketing level there. So another question that we see marketers asking a lot when they look at the survey results is, what's in the marketing budget? Because marketing, unlike other areas, as most of you know, what's in a marketing budget, what's not in a marketing budget varies tremendously by sector and by company, the way that the company's organized, et cetera. This shows you basically what's in marketers' budgets. How have marketers allocated, those budgets? And in particular, so this, if it says, for example, the 69.3%, that says 69% of the companies reporting in the survey have marketing research in their budget, and 51% have marketing training in their budget. So it shows you, among these categories that we've asked about over time, how those percentages are used in different companies, or how those categories are used in different companies. Okay, so let's go now. We've been through a couple warm-up topics. Let me show you some of the results that we have in both managing AI and in managing DE&I in marketing. And again, feel free to type any questions or clarifications that you might have in the comments section there in LinkedIn. So here's the good news. When we ask marketers to rate how the use of AI in marketing has affected various outcomes, we tend to see a very positive effect. So we see they're reporting here the percentage improvement experienced in their company. So from improved sales productivity at 6.2%, increased customer satisfaction 7%, and lower marketing overhead costs at 7.2%. So what we did was we picked these three outcomes. These are three that we tend to see reported in the popular press. And they are quite different from one another because you could have improved sales productivity, and that could come potentially at the expense of customer satisfaction. And so we were looking to see to what extent AI could deliver outcomes like these across different, touch points with the customer or different objectives that the company might have. So this is the good news. You see a little bit of economic and industry sector reporting there underneath in terms of which sectors and which industries look like they're getting a bigger boost from AI. So this is very, very good news. And I think maybe one of the rare sort of percentage level changes that we see reported in the literature. When we look at what's remarkable about those outcomes is that when we look at how many years companies have been using AI in marketing, we see actually this is a relatively new thing for marketers in many companies. So 60% or so are reporting using it for less than a year, and only about 3% for 5 years or more. And so we are very, very early in developing use cases and in demonstrating the effect. So I think, again, those first outcomes are relatively remarkable. When we ask marketers, how is your company using AI in its marketing activities, what we see this is basically the percentage of companies in the survey that report using this particular using AI in this particular way. So the dominant categories here are in terms of content personalization, as you see there, almost 53%, and then content creation at 49%. We're going to explore what specific types of content on a subsequent slide, but those really dominate. You see a big drop off in the percentage use across some of the other areas. And as I'll point out later, some of these areas are very strategic. And so I think what we'll see is that there's a bigger opportunity maybe for some of these more strategic uses of AI within marketing, whether it's targeting customer segmentation, data analysis and reporting. I think these are going to be, again, those more strategic uses, improving marketing ROI by optimizing marketing content and timing. So there you're really connecting those content issues and the timing of those content issues to ROI, which is something that, of course, marketers really do want and need. So we'll return to this, but this sort of shows you that usage is pretty narrow in terms of the way that marketers are leveraging AI at this point. And then in terms of the specific content areas, so if someone clicked yes that they were using content, then we asked them specifically within that, how are you using it? Are you using it for blogs or website content other than blogs? So this is within the 50 or so % that said that they were using it for content. And again, we see a sort of dominant set of categories here at the top, which I would call much more tactical things like the blog or social media, email copy. Most of these do have that sort of flavor to them. But the drop-off is pretty severe in terms of the usage levels within companies. So one of the things I wanted to do was to come back to those percentages that we saw right at the beginning. So if you go back and remember, here we are with these payoffs. So one of the questions I started thinking about was what are some of the factors that are helping companies achieve these kinds of outcomes? So what we did was we looked at other factors within the survey that we had information on, and then we tried to see if they were actually related to the achievement of some of these outcomes. So let me go back to my slide here. And this is one that we looked at. Remember I mentioned that companies were using AI. They were very early in the process. So the question is there really what you might call a learning curve, meaning that, over time, are we seeing that marketers actually that stick with this for longer, are they getting better payoffs? So what I did was I took my 3 outcomes that you can see here: sales productivity, customer satisfaction, and marketing overhead costs. And then we calculated the mean level of each of those outcomes by year. So if they were less than a year, 1 year in with AI, or 2 to 5 years, or 5+ years. And what you can see is that clearly there's a difference between these very early companies at less than a year and those that are way out on the learning curve at 5 years. And also less than 1 year and 1 year in. There's not much of a difference in this interim period between 1 year and that 5-year period. So it seems from these just initial data that we have that that you need to get up on that curve to get to these. You'd like to get to this 19% or 31% that we see over here on the 5+ years. But it seems like it will take some time to get there. You achieve a certain level after a year, and then there's sort of a waiting period, at least in terms of the data that we have, that shows that that you need to make other investments. And some of the other things I'm going to break out will actually show you that there are other things that companies are probably doing during this same time period. So let's see, there's a question here from Manav, and he is asking, were there any details on number 5, predictive analytics for customer insights? I'm going to come back to showing you whether those were more or less predictive of these outcomes here in just a minute. So yes, indeed, the predictive analytics, when companies are using that, they seem to get higher levels of sales productivity, customer satisfaction, and marketing overhead costs. And I think that is maybe the next slide or the slide after. I'll show you where that payoff comes from using that particular outcome. It's a good question. So another thing that we think would make a difference, and this probably coincides very deeply with the issue of getting the payoffs, is this idea of the digital marketing transformation journey. So what I'm showing you here is that companies you could conceptualize the fact that companies are progressing through a process. It's a change process. It's a journey from basically these early steps on the left side, where they're just trying to figure out what this transformation might look like digitally, including AI, through an emerging phase, where we get to integrated here, where we're trying to work across the company and the different, especially within marketing, this part of the organization owns this aspect of marketing, others own other aspects. So getting all of that customer information integrated across the different parts of the organization is what we're thinking about when we're talking about integrated. And then finally, institutionalized and established. This would be that much deeper place within the journey where companies are easily and systematically leveraging digital investments to drive and evaluate marketing decisions. So this is what we see in terms of progress on that journey. So what you can see is that compared to a year ago, we definitely see progress, more people leaving the nascent stage, and about the same number in the emerging phase, but definitely progress towards integrated and established. More progress is necessary, but you can definitely see that companies are making progress in that shift along the pathway, along that journey. So if we think about these categories, do they really matter in terms of being able to get benefits from AI? The answer is yes. And this is what it looks like. So what I did was I took these same 4 categories: nascent, emerging, integrated, established, and institutionalized, and then I looked at basically the payoffs in terms of sales productivity, customer satisfaction, and marketing overhead costs. And what you can see there is that, again, going from nascent all the way to established, we see a big lift off. We also see a lift off as companies get to the emerging phase. No statistical difference here between emerging and integrated. My guess is in part because integrated has its own complexities, right? You pick up a big set of wins when you start doing digital types of things, including AI in this emerging phase. And then there's cost integration. There's organizational conflict over integration. There's, it's expensive, which is probably why we don't save as much money from the AI, because they're expending to get these systems in place and get the MarTech operational. So we do see, though, that the journey does matter. And then on the issue of a final factor here is the percent of time that companies are performing experiments. What we did here is I asked marketers, to what extent are you using experiments to understand the impact of marketing actions on customers? It's a good thing to do this, but many companies don't do much of it. So what I did was I looked at sort of the bottom third, the middle third, and the top third, which you can see where those percentage breaks occur. And when companies use a lot more, when they get into this high use level of experimentations, which means 50% or more of the time they are using experiments, this is when they really get the lift. So Deepak has a question about the penetration of AI-generated marketing in emerging markets. I do not have any data on the use of or the selling of AI into those emerging markets. It's something I could think about, though, so thank you for raising that question. I really appreciate that. Okay, let me just go through one final thing here. Oh, and I guess one of the points I wanted to make here. So we're saying it's really important to get to that 50% mark or higher. But what you can see is that when we asked marketers, to what extent are you using experiments, the average is about 35.6. So we are off mark in terms of being able to, get the benefits, the AI benefits associated with that, with the use of experimentations. Okay. And then lastly, we had a question earlier from Manav about, how are these different types of uses of AI, how do they affect performance? So what I did here is I took that same graph I showed you earlier, and I've highlighted in red the ones that, across those 3 outcomes of customer satisfaction, sales productivity, and marketing overhead costs, the ones that tend to have a strong performance on all 3 of those. And what you can see is that, and I sort of foreshadowed this, that in fact, the ones that are in red there are slightly more strategic, not all of them. What you can see is that whether it's improving marketing ROI, the predictive analytics, customer segmentation, these are, targeting decisions. These are like core marketing strategy issues. And so we see that those are the ones that are giving the bigger payoffs. So it might be that content personalization, content creation are more like table stakes at this point. That's my theory. And that companies that are getting the bigger outcomes are going deeper into these strategic issues. Okay. So let me spend the last 5 minutes or so on managing DE&I. And I will say in general, what we see is a sort of downturn in these activities within companies. So for example, when we asked what % of your marketing budget do you spend on DE&I, what you can see here is that the percentage is about 2.5%. Variability across companies, but still only about 2.5%. So the second question was, by what % has marketing spending on DE&I changed in the last year? So this is more of a change metric, a growth metric. And as you can see over there on the fall of 23, that although the percentage of 2.3% is still positive, it has dropped considerably. We had this, you could see the the effect over time from February of 21, which I think was the first time we asked the question, through to September of 22, they were all in about the same band and had grown a little bit and stabilized at about 10 or 11%. But then we see this dramatic drop off of 79% down to 2.3%. And this coincides with a smaller percentage of marketers expecting DE&I to be a marketing priority over the next 5 years. So only 41% as opposed to almost 59% back in August of 21. And also, the degree to which marketers, here we're asking them, rate the degree to which your company has developed an inclusive approach to marketing decision making, meaning you've established steps to review and evaluate marketing decisions from a DE&I perspective. This is on a 7-point scale, and what you can see is that, let's say probably this is flat. There's not going to be any statistical difference. There is a numerical difference, but not a statistical difference here. And we also see a drop-off in the extent to which these DE&I marketing investments have paid off. So this is again on a 7-point scale. And we see all of these numbers dropping off. They're not dropping off a lot, but they are certainly not going up for sure. And so let me skip this just because I know I have a minute or so left. So one of the questions that we asked ourselves in looking at these numbers, you can see these are also dropping off a lot in terms of the non-white members of marketing organization and also disabled. Women are up. But we started thinking about, well, is there any key to unlocking better returns for DE&I within companies? Because if these outcomes are not occurring, and remember the outcomes that we were looking at were across employee outcomes, customer outcomes, they're in the middle, and then more financial, sales growth, or stock market returns, that companies aren't going to take on these activities. So one thing we looked at was to go back to this process issue, and we asked, if we take that process measure that we had, where we said, does your company have a strong process in place for evaluating the decisions that it makes in marketing around DE&I? What we see here is that, in fact, if we just do a median split, we make a low and a high group, which again is a kind of a brute force way of doing it, but it still shows us that, in fact, these mean differences are all statistically significant. So if you have a strong DE&I process, meaning, whether it's a DE&I review board or simple processes in place for ensuring that you're not just talking about DE&I, but that all decisions are sort of sent through this DE&I process, you see actually dramatically different, significantly different in the higher levels of these performances across employees, especially with regard to employees, but also customers and the financial outcomes. And so one takeaway for me looking at this data, at least on the basis of this early discussion and early analysis, is that this process really does matter, and it holds the company accountable in a way that is positive in terms of these outcomes. Okay, then the last thing is just to, since we're talking about taking actions around DE&I, we asked managers, marketers, marketing leaders, has your brand taken any public actions for or against any of the following social issues? And what we see here is that, in fact, the strongest issues are around equality, LGBTQ plus equality, racial equality, and gender equality. COVID is still in there. It's not as strong, but it's still in there as an action that companies are taking. So these still do tend to be important to companies. And then I thought I'd just show you this, because in looking at some of these other outcomes, what we see are some huge lifts in terms of the degree to which the brand is taking public actions on climate. We see a big lift there, almost 70%, abortion, 580%, and firearms, 227%. So big shifts there. Okay, so I think I'm going to end here, and I want to just point out that we do have the surveys on an ongoing rotation through the spring and the fall now. Would love to have you as a marketing leader at a for-profit U.S. company sign up, and you can do that at cmosurvey.org/participate. All of the data that I've shared with you and all of the data over time since 2008 are available on the website free of charge to help guide your decisions. If you have any comments, please feel free. You can write to me directly. Again, I want to thank my sponsors and also let you know that this LinkedIn Live series continues in December. On December 6th, my colleague Pino Lepomo will be here talking about optimal bidding systems in auctions, which I know some of you are thinking a lot about with regard to marketing. So I hope you'll join him then. Thank you very much.